Hello, everyone, and welcome to the Market Flow Stock Market Review and Forecast. I'm your host, Dr. BJ Love, and I'll be bringing you today's update for Thursday, September the 18th, 2025. Can't fight the Fed. Investors piled into equities. Investors piled into equities today following the Fed's quarter point rate cut on Wednesday. What does it mean when you say can't fight the Fed? Now, the Federal Reserve is a powerful influence of interest rates and money flow and usually has a profound effect on the market. Now, when the Fed lowers rates, as they did yesterday, usually asset prices tend to go up, and vice versa. When interest rates rise, prices tend to go down. And this is one of the golden nuggets that we provide here on the Money Flow channel. That is a rule of thumb that has been tested, proven, and tried for over decades and decades and decades. That's why we use the old adage, don't fight the Fed or can't fight the Fed. So investors piled into equities today following the Fed rate cut of 1/4 point cut on Wednesday. Stocks rallied at the opening bell, and the Dow Jones Industrial Average, the S&P 500, and the NASDAQ, as well as the Russell 2000, all posted new all-time highs. Giving a boost to the tech sector was a 23% spike in shares of Intel on a $5 billion investment by NVIDIA. And we were so fortunate to be in the trade with Intel, and we profited very handsomely from that move. The Dow Jones Industrial ended the day with a gain of 124 points and settled at 46,142, while the S&P 500 added 32 points, finishing at 6,632. The tech-heavy NASDAQ jumped 209 points, closing at 22,471, and the small cap Russell 2000 tacked on 2.5%, and for the first time hit a new high since November of 2024. So we're going to be watching closely that Russell 2000 and the top stocks that are contained within that indices for upcoming opportunities. Now, breadth was positive, okay, and the VIX eased 0.02 and closed at 15.70. As we reiterate on every broadcast that we distribute on this channel, we say that as long as the VIX, which is the fear gauge, stays below a threshold of 20, the markets tend to grind higher. That is what we have been seeing over the past year. Now, crude oil prices slipped 37 cents and closed at $63.68 a barrel. Gold prices lost $39.80. Oh, just rounded off at $40 and finished at $3,678 an ounce. Silver prices lost 12 cents and settled around $42 an ounce, while Bitcoin closed the session at 117,500. Now, with that introduction, we're going to move right into these charts and see exactly what the introduction is conveying. So here we have our four indices: the S&P 500, the Dow Jones Industrial Average, the NASDAQ Composite, and also the Russell 2000 that we mentioned. And we're going to look at these in a technical on a technical chart, and we're going to see exactly what's going on. If you've been with us for a while, you understand that we have a proprietary software that gives us a green background when the market is in a long-term uptrend. Now, here we are, right here. We've been in this long-term uptrend since May of 2025. And if you understand our methodology, each one of these price bars that I'm pointing to equal 1 week of time in the market. So for the past 1, 2, 3, 4, 5, 6 weeks, we hit a new high in the S&P 500 this week. You can see that we are in a long-term uptrend. And our philosophy that has been tested, proven, and tried that helps us to navigate these markets with confidence, calmness, and clarity. We see that as long as these price bars are above a rising moving average, here we have our 10-week moving average, and here we have our 40-week moving average, and the price is above both of them. And our proprietary software gives us a color code of green, letting us know that the market is still bullish. The market posture is bullish on the S&P 500. Now let's move on to Dow Jones Industrial Average. We see a similar case. Background is green. We have been green ever since June of 2025. Price bars are above these rising moving averages, and the rising and the background is green. Here we see our confirming indicator, which we call the MACD, the moving average convergence divergence. We'll get more into that as we get into the program. And it is giving us a confirmation that this uptrend should continue into the near future. We're talking the next 30 days or so. Now, we're going to move over in from the Dow Jones Industrial Average, and we're going to go to our tech heavy NASDAQ composite. And as you can see, same scenario. We have been in a bullish posture with the green background since May of 2025. Prices are above this rising 10-week moving average and above this 40-week moving average. And our confirming indicator, our MACD, is in a bullish posture. Always remember, this is the long-term trend of the market. Long-term trends dominate short-term trends fluctuating. We'll get more into that as we get into the program. Now, moving on to the last index that we watch, which is the Russell 2000, the small cap. We have been bullish on this particular index since July of 2025. Again, there's a little bit more volatility going on, but as you can see, the price bars remain above a rising moving average. That is what we preach here. And the background is green. The supporting indicator, the MACD, is in a bullish posture. So what is our takeaway? If we have all four of these indices that we watch that monitor various versions and various sectors and various parts of the market, if all four of them, excuse me, are in a bearish posture, the market is in a full bearish posture in the long term. In the long term. So now, with that said, let's look at some of the stocks that we have been watching in some of the strong sectors, like the metals sector, like the precious metals. And we're going to take a look at the dollar. We're going to switch to another screen here. Okay. No. Let's go back. We're going to switch to another screen here. And then we're going to take a look at the dollar, the US dollar. And I'm going to give you another gold nugget here. This is the US dollar. And as you can see, on a daily basis, it's going down, down, down. And then on a weekly basis, which is our long-term indicator, now we see the opposite of what we saw in the major indices. Here we see that there is our long-term trend is down. How do we know it's down? Because we have a proprietary software. Now it gives you a different view. It's not the background, but it is the moving average. The moving average is moving down. How do you know it's moving down, Dr. BJ Love? Because it is red. And our software tells us that when this moving average here, this long-term weekly moving average is red, it is going down, down, down. And you can see that with the naked eye, right? So, and then the price is below that falling moving average. So you don't want to be invested in a stock like this. But the reason I'm showing you this particular chart is that when the dollar is falling, precious metals move in the inverse. Just as we stated that rule of thumb about the Fed having control over interest rates and money supply, and usually influences the direction of the market. So does the US dollar. When it is going down, precious metals go up. So we see that we got a signal here that the dollar was going down. We're going to look at March of 2025, right? So let's look at that. And then we're going to look at gold in March of 2025. Where's my gold stock? March of 2025. That's January, February. Here's March. Gold since then has been going up, up, up. So you can see the inverse relationship that the US dollar has to precious metals. Same thing with silver. Even though silver has been falling on the short term, look at that rise since the dollar has been falling in silver, the precious metals that we follow. So you can see the inverse. You can see that opposite correlation as when the dollar is falling, precious metals go up. So that's why we stay invested in precious metals as of right now. And also because the general market is in a long-term uptrend. What stocks do we look at in that we are invested in gold? KGC. How do you like that? This is right now a $22 stock. We first got the signal at $9 back in January of 2025. And because these price bars stayed above our rising moving average, that lets us know that we can continue to remain in this stock. And since we've invested in it at $9, it is at $23 now. So we're looking at almost 200, between 250 to 300% move since when we get the since January. So not even a year. A lot of people don't even receive that type of return in a lifetime. But we here at the Money Flow Market Review and Forecast, we have a system that locates these kinds of equities to invest in and lets us know when to invest in them and to remain in them. And then if things should turn around, it looks like it's going to be a top right here because I see something happening in one of our major indicators, which is in advance. We'll put together a home study course for our viewers here so you can understand these, or you can just, have one-on-one coaching with me so you can understand what is going on in these general markets. And so that's KGC. That's our gold stock. We're also looking at Bitcoin. Bitcoin, when you look at Bitcoin, that's BTC, general Bitcoin, you can see it's having a little bit of a challenge right now, but it is basically in a uptrend with a moderate pullback at this time. It just kind of, what they call it, consolidated. But ever since we got the signal here back in April, Bitcoin has been up, 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 and it's starting to retreat just a little bit. So what is our stock that we're looking at in Bitcoin? BITF, right? Boom, it's starting to break out on heavy volume. That means big money is flowing into this stock. We got the signal here when it was $1.08. It has now reached a high of $3.60. So we're talking almost a 300% return on our investment since we got the signal here back in July. Wow, what a bargain. So that's what we offer here at the Money Flow Stock Market Review and Forecast for free. We give you insights on the stock market as a whole, and then stocks that are moving within that are really moving in the stock market that we are invested in. We have many more, but this is just two we're going to share with you right now. So with that said, what is our takeaway? The stock market is still in a long-term bullish atmosphere. And so with that, we're going to say every day and every way we get better and better, every day and every way we grow more prosperous, successful, and victorious.